What you're looking at right now is the trajectory of every dividend investor's go-to real estate investment trust, Realty Income. And as you can see, it's down on the year by over 5%. Now, after Realty Income just reported earnings, I wanted to go ahead and pose the following question to all of you. Is this notorious dividend gem still a buy, or should you in fact be running in the opposite direction? With that, are you ready? So first and foremost, let's just have a very brief chat about the company in and of itself, as well as our economic environment. Because if you're a true investor, you'll know it is never just about throwing money into the stock market and hoping that you're going to win like you're sitting at some slot machine in Las Vegas. In other words, knowledge really is power, and with information comes informed decision making, which tends to lead to more lucrative returns. Anyhow, Realty Income, a real estate investment trust, as I'm sure you know, is the industry's leading net lease solutions REIT, meaning it outshines all the other REITs in terms of portfolio size, which we're going to cover in a hot second. But more importantly here is the fact that Realty Income's business model outshines all business models. You see, the company doesn't just lease out commercial properties and charge rent, but rather their clients actually sign a net lease, which means that once a client signs the lease and the keys are handed over, all expenses are covered by the client, whether it's the simple fixes, property taxes, or maintenance, or really anything in between. All falls on the clients. That makes for one heck of a business model, and as we check into Realty Income's portfolio, we can see they are using that business model for well over 15,000 properties that span across the United States and even abroad as well, as their portfolio continues to grow. Now, what I really love to see here is their client base that amounts to over 1,500 clients, giving Realty Income's team plenty of security. And we can even see a lot of strength within that security because that occupancy rating holds over 98%, meaning less than 2% or about 216 properties at any given time aren't leased out, which, as someone who worked in real estate in Manhattan, is pretty dang healthy. But if that all sounds fine and dandy, like peaches and cream or whatever other proverb you want to go ahead and sing, why is the stock then trading in the red right now, down on the year by over 5%? Well, now, big picture, what you really got to come to understand is that interest rates are dictating the direction of share prices for a lot of companies, but especially for the real estate companies that are in the game for all of us. You see, when rates are higher, we become concerned about defaulting on loans, which any real estate operator, successful operator, knows that's exactly how these businesses run. But more so, the inability to even secure loans cheaply, if you will, is 10 times harder, meaning acquiring more properties, developing those properties, or just expanding the overall portfolio is more of a challenge than in a lower interest rate environment, whereas money really does come easier. And macro-wise, if you were subscribed to the channel, you'd know that we're in a higher interest rate environment. We're likely to remain in a higher interest rate environment for a prolonged period of time because the Federal Reserve continues to stress their lack of confidence when it comes to inflation, therefore tabling any and all interest rate cuts perhaps well into next year. So we can really expect Realty Income and all of its peers to lag behind other investments for some time longer. Don't let that scare you. But macro talk aside, and getting a little bit more micro with Realty Income, the team just reported earnings for its first quarter of 2024. Earnings per share came in at 16 cents, which missed analyst consensus estimates here of about 39 cents per share. However, funds from operations, the FFO, which is more widely used within the industry for REITs, came in at $1.05 per share. That actually outbeat analysts' expectations. Furthermore, revenue toppled over $1 billion, hitting $1.26 billion, even in the midst of all of these poor economic conditions, which shocked analysts as they expected about $160 million less than the reported total. Now, I would argue that Realty Income's results were solely driven by a very strong occupancy rating, as we saw at 98.6%. Now, I do want to just show you through at an overview their financial track record here, as we can see their earnings and revenue history improving year over year as the company scales, and perhaps not at the rate it used to, but is still growing and just managing very well to ensure a very healthy debt to asset ratio year over year, which remains paramount for the longevity of any company. And while they have been seeing some insiders trade out of the holding, hedge funds have certainly begun begun to actually swoop in to buy more shares rather recently. Now, again, I don't think that we're ultimately going to see more insider buys and huge hedge fund movements until we get more clarity from the Federal Reserve about interest rate cuts. But when I look back to see over 100% worth of share price appreciation over the past decade, the overall health of the company, even as we've been in an economic slump, I'm here with the analyst to say I like this stock still and I give it a buy. So my buy stamp of approval right there for you with the analyst, as there's projections right now of this stock hitting almost $60 per share. Now, I think beyond that, we're going to see a recovery to the mid to high $60 per share range. That's all post interest rate cuts. But that in the meantime leaves us, well, shouldn't be depressed. We should just enjoy the dividends because Realty Income shelling out a very strong dividend, coming in at 5.56% worth of a yield. Now, hasn't been growing like it used to. We could see here about 5% per year these days, but remains a reliable buy with 55 years worth of a track record that is likely to remain strong for the foreseeable future. So no, Realty Income didn't necessarily have insane earnings, nor is it likely to skyrocket and be your get rich by Tuesday lottery winner. But I can say, in my opinion, it remains a buy for any dividend investor looking to increase their monthly income. And once rates actually drop down, Realty Income is very likely just to continue on with their strong fundamentals. But that's just me in my opinion. Drop all your thoughts down in the comments below. Let me know if you think this stock is a buy, if it's a hold, or a sell immediately. Let me know. Be sure to subscribe for all of my latest, or just click right here for more insights now.